Good morning. Welcome to the weekly meeting, March 9th. I was on that beginner session yesterday, and we kind of had an interesting conversation about the cyclical nature of the market. All right. When I say market, I'm talking the financial market in its completion, in its totality. Okay. So in America, everything that we do is tradable, right? We can trade businesses, and we do that by trading the stock market, right? You can buy stocks, you can buy pork bellies, you can buy orange juice futures, you can buy oil futures, you can buy gasoline futures, you can buy natural gas futures. Everything that we do as far as an economy, what we produce, everything is tradable. We can trade that. So when I say market, it's an all-inclusive thing. Okay. And after that conversation yesterday, I think it's important that we have that conversation here, because if you don't understand that very basic thing, I think you are trading in a shoebox, and it's never good to trade in a shoebox. And here's what I mean by that. When I first started trading, I kind of approached it as like a blind man, right? You don't know how the market works. You're looking at one trade at a time. And while you can be successful looking at one trade at a time, you're going to find major success or success on a larger level if you trade with the understanding, a total understanding of the market. Okay. So I want to take a look at a short video that's going to explain what the market is, or, basically the economic cycle. And, I was saying cyclical a lot yesterday. Everybody had fun with it, like I found a new word, but, it's cyclical. It's a wheel. It's cyclical just the same way your personal financial cycle is cyclical. You go broke, or you get low in money. And that tends to happen in between paychecks. So when you get paid, you got all kinds of money. Your spending power is great. As you go through that money, your spending power diminishes. And then you get hit with another paycheck. So it's a cycle. America is no different. The government is no different. Everything that we do it in cycles. Sometimes we have a mass amount that we produce, and other times we don't produce as much. So you kind of have to have that total understanding of the market. So that we're going to look at it right now on this about a 7-minute video, I believe, and then we'll talk about it.
Hey everyone, I'm Mr. Willis, and you will love economics. Okay, so macroeconomics is the study of the aggregate economy as a larger whole, including its interactions with other economies. It's the big picture. Unlike microeconomics, which investigates individual markets, macroeconomics analyzes all firms and all consumers and every facet of the collective economy. In essence, macroeconomics was created to measure the health of the economy and then guide policy to help the economy reach optimal performance. In this unit, we're going to focus on reading economic indicators and measurements that help tell us the health of the economy. But there's one graph that shows it all: the business cycle. You see, every society on Earth has 3 economic goals they wish to accomplish: promote long-run economic growth, prevent excessive unemployment, and keep prices stable by limiting inflation. Because the business cycle is a visualization of economic conditions, it's a graph that can show us how societies are doing with meeting those goals. And this is the business cycle. Let's start with the basics. First, the business cycle is measured by 2 components: real GDP over time. Real GDP is the total output produced by the economy, and time is usually measured in years. Okay, whoa, What's up with the roller coaster here? That blue line with up and down fluctuations is the economy's real GDP output over time. In other words, it tells us where we've been and where we currently are. Real GDP can increase over time, meaning the economy is growing and getting bigger. This is called a period of expansion or recovery. Real GDP will continue to grow until it reaches a peak, which is the highest level of real GDP growth before the economy begins to immediately contract. Real GDP can also decrease over time, meaning the economy is shrinking or getting smaller. This is called a period of contraction or recession. Real GDP will continue to shrink until it reaches a trough, which is the lowest level of real GDP contraction before the economy begins to immediately expand. These fluctuations continue in an up and down pattern for months, quarters, or even years at a time. There are two causes of real GDP fluctuation. The first are static effects, which are natural market fluctuations caused by changes in the free market conditions. Changes in consumer behavior or productivity of firms can cause these fluctuations to occur. And these changes are, well, cyclical. Economic fluctuation brought about by static effects means that when the economy expands, it usually is followed by a period of contraction. And when the economy contracts, it's usually followed by a period of expansion. It's just the way the economy is. The second cause are known as shocks. Shocks are unpredictable events, like wars or financial panics or natural disasters, that serve as sudden, abnormal catalysts of contraction or expansion in the economy. Events like World War II, the September 11th attacks, or Hurricane Katrina are great examples. These events can either be positive or negative for the economy, and can help drive the economy towards expansion or contraction. Either way, fluctuations that occur due to static effects or shocks that are too big mean the economy is unstable. And if the market does not return to normal on its own, policymakers will attempt to stabilize the economy to prevent excessive unemployment that results from contraction and limit inflation that results from expansion. So, how does this graph tell us how we're doing with the economic goals of promoting economic growth, preventing unemployment, and limiting inflation? This red line here, it's called the growth trend line. It's upward sloping because it represents the optimal rate of real GDP growth over time that the economy wants to achieve with the full employment of all available resources. It's used to compare where we are, wherever that might be on that blue real GDP line, compared to where we want to be. With that growth rate comes an acceptable rate of inflation. It's natural to have inflation over time. It's the reason why we can't get a 15-cent cheeseburger at McDonald's anymore, or a $1 gallon of gas. When the economy grows at a rate faster than optimal, the economy experiences excessive inflation of prices as the economy overheats. The level of excessive inflation is visualized by the space between the peak and the growth trend line on our business cycle. A peak of any type means the economy is failing to satisfy the goal of limiting inflation because inflation is above the acceptable rate at the growth trend line. When the economy contracts, the economy experiences excessive unemployment as jobs are lost when the economy shrinks. The level of excessive unemployment is visualized as the space between the trough and the growth trend line on our business cycle. A trough of any type means the economy is failing to satisfy the goal of preventing unemployment because excessive job loss is occurring because the economy is contracting instead of growing. One business cycle is defined as a peak, trough, peak. And business cycles will vary in length and severity. Some cycles are short and shallow, while others can be deep and long. The higher the peak, the more excessive the inflation. The deeper the trough, the more excessive the unemployment. The longer it takes real GDP to return to the growth trend line, the longer the excessive inflation or unemployment persists in the economy. So when peaks and troughs occur, the economy may return back to the growth trend line on its own. But when it doesn't, policies will be used by the federal government and the Federal Reserve to limit the peaks and the troughs in order to minimize excessive inflation and unemployment and return the economy to the optimal conditions at the growth trend line. And let's be clear, while economic contraction can be called recession, an economic recession is classified as 2 straight fiscal quarters or 6 straight months of real GDP contraction. And a depression? Oh man, it's severe and prolonged recession with incredible unemployment and deep real GDP contraction. I'm depressed. And that's the business cycle. Be sure to subscribe to the channel by hitting the red button below so you can receive alerts about new videos when they become available.
I know some of y'all's heads are smoking from that 6-minute video. Do you guys have any questions?
Yes, sir.
For everybody understood? Everybody understands the business cycle.
They all understand it, man. Let's move, keep it moving.
All right, I'm glad everybody understands because I have some questions. If you understand the business cycle, since everybody said they understood the business cycle, how would you advise me to set up a trading plan to take advantage of that business cycle? Let me repeat the question. Come on, y'all. Ghostbuster T, Selena, Phoenicia, Isha, Elfie. Somebody help me out. How?
You would start from the higher time frame.
Well,
Look at the
okay.
chart on the higher time frame.
Okay, let's
and
look at the
the
chart.
cycles.
What am I looking for? What specifically, before I even look at a chart, what should I be looking for? And I always look at charts on the higher time frame, so that's always going to be a great answer for me. What should I be looking for? What should I be anticipating? How do these cycles match up to the charts?
So
Well, when I saw it, it looked like a Wyckoff schematic, kind of like with the accumulation and distribution. So would you
Okay.
need something like that? That's what it
Supply
looked
and
like.
demand.
So listen, that's technicals. Technicals are great.
Mhm.
The business cycle is strictly fundamental, right?
Okay.
There are some basic things that we have to deduce, that we have to understand. We have to draw from our physical environment. Okay.
Todd, wouldn't it be looking at what's going on around us first?
Of course. But I want you to tie it to the current economic conditions. The current economic conditions should tell us exactly what we should be trading. And here's what I mean, guys.
Okay.
If I understand that there is a business cycle, I should also understand that depending on what cycle, what level we're in that business cycle, that should determine where I'm putting my money. Does that make sense?
Yeah.
Well, okay. I can tell it. I can tell it doesn't. So I'm going to elaborate. You guys have to ask questions, man. Like this is very important, right? Because when you understand, okay.
hey,
What's up? Yeah.
Pull back a picture of that chart that guy had up. With
Well,
those.
I am.
Pull it back up.
But even hold on. Business cycle. I'm just going to go to a Google page with a business cycle. All right. This is the exact.
We just see a picture of your ass on the screen.
What about now?
No, not yet.
Oh, I got to share a screen.
Mhm.
That would be my guess.
Okay.
Okay.
All right. This. So
Think start with interest rate.
Well, I am, but
go ahead.
I wanted to give people, because they said they didn't have a question, I wanted to give them kind of time to connect those dots. So if you understand where we are in this cycle, you'll
Just
understand where
explain
you
to
should.
someone who understands where we are. Just explain it.
Oh, hush, Sean. Let me get to
Start
it.
with it. You know,
Let me get to it.
oh, nobody understands.
Obviously. But if you understand where you are in this cycle, then you will understand what you should have your money in as far as trades, and not just a 5-minute chart or a 4-hour chart, right? We're talking about a period of time that you can take advantage of the market going one direction. For instance,
Mm.
if we're in a period of a boom, if the market is booming and like the inflation is getting too high, like it was when we came out of that free money cycle, after Trump and them gave us all that money and those PPP loans and all that stuff, and everybody had money and they was buying everything, and inflation was about at 19%, and the Fed
Oh,
was
y'all
saying,
was blaming Joe Biden for the high inflation.
yeah.
Y'all blame Joe Biden for the high inflation.
So,
So all the fucking money was printed under Trump, you know? Yeah, that,
yeah, so after Trump bankrupted the country by giving y'all all that free money, and so I bought all the beer off the shelves when I was in California working for the railroad, and we had
crab legs and bullshit like that.
yeah, we had 65 beer cars. I had nowhere to put the beer cars because y'all was buying all the beer with all that free money. The Trump bankrupted the country, and the inflation was like 19%, and the Fed was telling y'all it was 9%. Y'all remember that? We
Oh,
were
I remember that.
so that's called a peak. We were booming up to the peak, and at some point, the Fed said, "Hey man, I got to raise interest rates." And as soon as he said raise interest rates, what happened? The US 30 and everything started selling. Y'all remember that?
I wasn't looking at US 30, but
No.
Well, let's go look at it. Let's
Back
go
and show it.
let's
Go
go
back
look
and
at it.
show it.
Praise the Lord. And
in
peace and
fact,
cross supply and demand.
I don't want y'all to say supply and demand. That's a bad word.
Yeah.
I want
Fuck
you
that
to
shit.
I want you to understand what goes on in real time. This is the pandemic. It crashed the market. Trump gives y'all the free money. Look at what happens. Everybody has access to free money. I started trading in August. I went from $300 to $11,000, and I ran into a correction. I didn't understand correction. Look at what the market does. The market goes, look at what price this is, 21,905. 21,905. The market goes from there to 36. It went up 15,000 points. 15,000 points. From April.
can I say something?
Yeah.
Okay, yeah, as we're looking at this, in my mind, when all of the pandemic stuff happened, when they were giving away the free money,
Mhm.
even like in my mind, because I did not see the bullish chart, I wasn't looking at US, like I wasn't able to understand. I was thinking that because they had to give us money that we were already poor in the recession. So in my mind, I was thinking we were already declining,
Well,
but
listen.
all that time they were giving us money, so the market was actually still booming in that, like the.
So you're right. We were in a recession. We were, and that's why they gave you free money. Now, nobody told them to give you 6 times the amount of free money that you needed. Like we didn't have to print 80% of the dollars ever printed in the history of the United States.
Right, but hold on though. Show her the recession.
You see these months right here.
February, March, yep, right as soon I see
that
big
that was
candle.
the pandemic that crashed the market.
That's
right?
Yep, I remember.
That's the recession, guys.
Yeah. So you see, look at where it came from. Look at the price that it came from.
Yeah.
The market peaked about 30,000, 29.6.
Mm-hmm.
And in 2 months, from February to March, It fell.
Mm.
Look at that. Look how far it fell.
Yeah, yeah, it's crazy. That's
So,
what we was talking about. Ruby made that 200K on.
Well, she made
right.
it. She made it on buying though. She made it in a free, basically a free money. The cost of money is inexpensive.
Mhm.
So businesses can borrow money and they can grow, they can expand, right?
But why would the
Mhm.
cost of money inexpensive?
Because the interest rates were zero.
Okay, right. So I just want you to say that shit because
Oh,
everybody
oh,
doesn't fucking understand that.
Well,
So
listen, this will require you to watch a video or do some research. Now I get it. Most of y'all have been with us long enough to where we probably think you should know a little bit more about this sort of thing, because we talk about this frequently enough where everybody should understand what the raising interest rates does and what lowering interest rates does. I think everybody should understand the meaning behind raising interest rates and what that means. All of us have credit cards, right? Is anybody on here that doesn't have a credit card? Or has
is there
never
anybody
had a
on
credit
here that wants to buy a house
yes.
or owns a house?
Do you know?
Guess not.
Do you know
I know
the
the interest rate is 7% right now,
So do you want to buy it 7 or do you want to buy it 2?
too.
A car, a house, use your credit card at 7 versus 2, whatever. Do you
Yeah.
want to borrow money at 7 or 2%? That's really the question, and it's more of a rhetorical question. So when we talk about the price of money and money being expensive or being inexpensive, that's what we're talking about. That's why interest rates are important to markets.
And that it is important for all of y'all to understand when this really kicked off. Back when we had that housing bubble in 2008, if you look at what happened, like we were in dire straits. We really lost everything. Y'all gotta understand that. We, in the history of America, pretty much, we lost, like, look at this decline. So that housing market bubble really bankrupted the country. Honestly, it just bankrupted the country.
It bankrupted the whole world.
Yeah, the world, because
Mhm.
after the .com, it's really a global economy. So when China's economy fails, it's going to affect us, and vice versa. It's all jointed. Like everybody's money is commingled, and that really, this decline right here really should have. Everybody should have been like in a Great Depression. But the answer to that was just to print dollars and lower the interest rates. So basically, the interest rates have been low since 2009. And
So question,
yeah,
when they lower the interest rates, fundamentally, does that show up on the chart right away, or is it a lag, or how?
yeah, no, well, it does show up right away. But
Shows up right away.
just like printing money shows up right away. But you have to know where to look. You got to look at those indices. You got to look at Bitcoin. You got to it's a reason those things skyrocket.
Yeah, CHS fire extinguisher checks are done in building 3.
Let's talk about this. Why does it show up immediately? When you lower interest rates, that means if you have your money in your savings account or in your checking account or any interest-bearing account, and they lower the interest rates to 0 or 2, and you got $1 million sitting in your checking account or your savings account getting 2% interest, and then you look over and the Dow Jones is giving you 30% interest a month. You know what I'm saying?
You might as well move your money, like you said.
Yes. Yes, that is it, and that is all. Like, do you want to make 30% interest, or do you want to make 2? Anybody?
Yeah, and in order to do that,
Yeah.
you need to understand the chart.
But this is why my brother has been telling you, hey, buy Bitcoin.
You don't have to understand it.
Right? Do y'all understand? That's why he was saying buy Bitcoin. What happened with the Fed? Are we raising interest rates, guys, with the Fed? Is Jerome Powell coming on raising interest rates? We were raising them every time we meet. Are we raising them? When's the last time we raised interest rates in the United States?
Last year.
So, have you guys bought the US 30? Have you bought the NASDAQ? Have you bought Bitcoin? Not traded. Have you bought it? There's a difference between buying and holding and trading. If you understand when interest rates go down, this happens, right? Then
Why are you trading?
yeah, why are you trading? Why don't you just buy it and hold it? It's going to go up and down, but you just buy it and hold it. Buy it and hold it.
Losing money on the 4-hour chart and the 15-minute chart.
Yeah, instead of over leveraging, trying to win $100 on a trade or $1,000 on a trade, you buy it at low leverage and you just hold it for 6 months or a year, however long that they leave these interest rates down. This cycle is just starting. This boom is just starting. And look, it shows up immediately. When did we stop raising interest rate? Look at this boom, boom. If you had bought anytime
In October.
yeah, you're not negative. You're only positive, and it's only going to keep going up. We're going to give it a little pullback. Maybe it pulls back to the trend line or to the moving average, but we're going higher after that. How long are we going to go high? We can look at the pandemic. 1, 2, 3. Huh? So we can go back and look at the pandemic, and you can count how many months. This is basically, we're restarting this cycle, because if you look at it, when we came down, interest rates are lowered to 0 here. We're going to lower interest rates. We're here pretty soon. We're going to lower interest rates because they've been raised. They've been high forever, and the economy is going to crash, right? So once the economy crashes, they're going to lower them interest rates, and guess what's going to happen? You see this? They're going to pull back, and then it's going to just keep going, keep going, keep going. And then you're going to have a little correction, and it's going to keep going, keep going, keep going. And then eventually, whoever the new Fed chairman is going to come on TV and say, hey, we got to raise these interest rates. And then you switch your money from buying the US 30, from buying the Bitcoin, from buying all that, to a position of selling it or buying the dollar. Oh, the dollar. Let's look at the dollar. Sweet baby Jesus. The dollar, wow, it's going down. That is not an accident. It is not a coincidence. The dollar is doing the opposite of what those indices are, because everybody is transferring their money out of the dollar because there is not gaining any interest anymore. And they're putting their money into the assets, the real assets like the Bitcoin, the companies, the businesses, because since the dollar is going to go down and it's going to get cheaper, it'll get cheaper for those businesses to borrow money, right? So that's what you're seeing on the chart. And nobody should have to tell you this. Like, this should be automatic. You should have an understanding the same way you have an understanding that, hey, man, when there's a sale at Target, I got to go buy my stuff. Nobody has to tell you that. As soon as you see sale, you out. You in your car and you out. Or your favorite shoes, when they go on sale, nobody has to tell you, hey, go buy those shoes you were looking for. Go buy that jewelry you was looking at. No, nobody has to tell you that because you're out. You're out. It's automatic. And this really should be our thought process when we approach the market. We should have a general understanding that, hey, whenever the Fed lowers interest rates, I need to put my money, or when they stop raising interest rates, because they haven't lowered them yet. But when there's no threat of interest rates being raised, I need to start putting my money in small increments into the indices. Buy and hold positions. The same way that I told you guys to buy and hold on that oil a couple of months ago, you just want to get small positions. You want to start accumulating positions in those indices, and they will start pushing up. And on the flip side of the coin, you need to start accumulating shorts in the US dollar. It doesn't have to be huge positions. These need to be small positions that will grow over time. Because we're looking at it, probably a 12 to 15 month time period that these cycles are going to happen. And I dropped a video with your boy Raul Paul yesterday, and he talks about like the cycles to a T, and basically we're on about we're about on a 4-year cycle. Would you say, Sean, a 4-year cycle? Yes,
Yeah.
I say you're right. Bull markets, bear markets, and the problem with the cycle that we're on is it's predictable. You know what I'm saying? So if you know what you're looking for, then you just cycle your money every few years. And listen, when you screw your trades up, because you're going to screw some trades up, don't worry about it, because it's going to come back around. It's going to come right back around. If you think about it, everybody who was trading back in 2020.
I have a question.
Okay, I'm sorry, I muted you, Elfie. Go ahead. Elfie, I muted you. You got to unmute.
Can you hear me now?
Yeah, I can. I thought that was an accident. Go ahead.
Okay, so can you clarify about the 4-year cycle and where we are now?
Elfie, when did you start trading?
October 2020.
Okay, that's great. So you already know about the 4-year cycle. When you started trading, the interest rates were not high. They were basically at zero back in October of 2020.
Well, go back to the fucking.
I'm going to show it. I'm going to go to the market, but in October
for herself. Bro.
In October 2020, the interest rates were still very low. This is November. This is October 2020. We had a correction. This is when you started trading. The interest rates were zero. So look at what the US 30 did. This is it. The market pushed up. It gave a pullback, and it pushed up higher. It gave a pullback, and it kept pushing. And it kept pushing. And I remember you were in the group, and that we had that meeting at the end of December 2021, and we said, hey, the interest rates are going to get raised. So we need to sell the US 30. Do you remember that? You don't remember that? Hey, yo, I'm going to pull up that meeting.
I think I do.
Oh, I'm going to pull up the meeting.
What? I think, LP, you're missing the point. Who gives a shit about the cycle links? Because they're leading you down the primrose path. They come out and they tell you we're lowering rates. We're not raising rates. That's when you should buy. Then they come out and tell you we're going to be raising rates. So that's when you should be getting out of your buys into your sells. So I think some of the shit is noise. You know what I mean? I mean, you're worried about the wrong things. If you understand the keys that drive the market, then the links and that type of shit don't really matter.
That's 100% facts right there, Elfie. Because
well, like I said, I mean, when I hear you guys talk about the cycle and this and that, I'm just like, okay, first of all, I only understand Chinese, and I'm like, okay, so what is it that I need to focus on? And Sean just said, okay, basically, I just need to listen out for the announcement, whether interest rates are going to be raised, and when they do, or lower.
Alfie,
is this correct?
Alfie, you hear me, Alfie?
Yes.
Stop talking, and I'm going to try to explain it. Okay, Alfie. Number one, you're in this group, okay? And we talk about this stuff. Number two, you do have a television, you got internet, etc. So the keys to the markets, the biggest key to the market, I would say there are two of them. Interest rates and printing money. Those are the two keys to the market. If we're going to lower interest rates, it's going to make money cheap. Most of the companies and businesses and everybody's economy have to borrow money to run their businesses. So when interest rates are high, the market falls, businesses contract because it's too expensive to borrow money. They fire people because, you know, they don't want to borrow the money. It's too expensive to pay everybody and pay the interest on the money they borrowed. Okay. It's no different than you not wanting to buy a car at 15% interest. You want, you know, 2% interest on the car. It's no different than you not wanting to buy a house at 15% interest. You want 2% interest. It's no different than you not wanting to pay 15% interest on your credit card. You want to pay 2% interest. So interest rates are what drive the economy. You raise interest rates, those indexes are going to fall. You lower them, those indexes are going to go up. Fucking period. That is it. That's all you need to know. And then you factor in the other big key and driver, it's liquidity or excess money. When they print money, like they did in the pandemic, or when a bank fails and they bail the bank out, or when Evergrande over in China fails and they print those yuan, or in Europe, when y'all print money for whatever y'all print it for over there, or when there's a war in Israel, a war in Ukraine, a war in anywhere, and we give them money, billions of dollars. We print the money, okay? Anytime you hear any of that, somebody's printing money. The money's going in the market, it's going up. Those are the two drivers. That's it. And then when you factor in that you guys, most of you guys have a clue how to read a chart, you know, so, hey man, real quick, pull up the Bitcoin chart, you know, put it on the 12-month chart. Okay. See that peak in the middle?
You said 12-month or 1 month?
1 month chart. Okay. See those double peaks in the middle of the chart? That represents the height of the last cycle. If you notice, he puts this thing on it and you look at the month and time, it's in 2021. Damn, man, put it on there. November 2021-ish. That's around the time they started saying, hey, we're going to raise interest rates. You move forward, we had the crash. Bust out your Fibonacci, Watu. Measure the price action from March of 2020, which we're saying is early in the last bull run, and take and measure price all the way up to the top of the last run.
This is March 2020. There's red candle.
And you're going to see that price pulled back 80 motherfucking%. Okay? Elfie, you know an 80% pullback is an optimal trade entry. That's why I was telling you guys to buy Bitcoin, to buy crypto, to buy shit, period. And you ignored me. You blew me off. You said, fuck off. So now look where price is.
We did not.
Next time, guys, buy the shit.
And I think more importantly, I think what you're going to see is, or I think the thing to notice here is not just the sting of you missing the move, but if you notice right here, this is November 2021. I can't find that meeting. I will find it and post it, you know, when I have time to look for it. But this is November 2021. They raised interest rates in January of 2021. We all knew, we were all on the call. We all talked about it. What we did not understand was how far everything was going to drop and how long we could have held those sell trades. So what you do now, because you've lived through it, because you've traded through it, because you've seen it before, is now when they say they're going to raise interest rates, it's a trade that you can carry for months and months and months, right? So you see this Bitcoin went from 66,000 all the way down to 16,000. That would have been a great sell trade. Let's look at the the US 30. The US 30 in January 2022 went from 36,000 down to 28,000. And basically it took 9 months, right? Took 9 months. It went to this low right here. And if you put a fib on it, it wasn't as deep a retracement as the Bitcoin. But
Dang.
this all coincides with somebody saying we're going to raise rates, right? We didn't get a 50% retracement. And now we're already pushing up. We're pushing up because now everybody understands we're not raising rates. Rates won't be raised. The next move the Fed will make is they're going to lower rates. So why would a millionaire leave his freaking money in a checking account? He's not. He's going to get a return for his millions. So I will put my money into businesses, because when money is cheap, those businesses are going to blow the hell up. I can afford to borrow all the money I need to grow my business. That's why the technology, those companies are going to blow up. Look at NVIDIA, the AI craze. You know, everybody's putting money into those companies because that's where you're going to get ROI, return on investment. You're going to get return on investment from investing in companies, not from putting your money in a checking account or a savings account. This is why your Black relatives are going to be broke forever, because what most of us don't understand is, I don't care how much money you have in your savings account or your checking account, inflation will outpace the money you get paid by that bank. They told you that inflation was at 9%. It was way above 9%. It was at 9% from what they picked and chose. You know what I'm saying? And none of y'all made 9% a month or 9% a year in your checking account last year. None of you made it in your savings account. So if you're not making the money, you're pissing it away.
Okay, so question, when you say hold the buy, are you talking about holding the buy in like inside of a trading account, or is that like another?
You can buy it in your Forex account. You could have bought a Dow Mini buy. You can buy it. You could have bought the Dow Jones in October. You could have bought it in November. You could have just hit buy 0.01. If you had a $200 account, you don't lose. You're not losing that trade. It's going straight up. It's not pulling back. Now, I told you
that's another thing I was going to ask. What's the minimum amount, like, just to be sure that, because
well, listen, y'all.
Like $200.
Yeah, but this is where you come in. You and your mental capacity come in, right?
Mm-hmm.
So if you're trading a mini, then you don't need a huge lot size. You need to start small, guys. We all get in trouble because the first thing we ask is how big of a lot size can I use? Use the effing minimum. You're not making any money anyway. Use the effing minimum. And as your position size grows, listen, you have a year to grow this position out. So start with the minimum, and you can always add to it. Now,
after that, change your character on like on the daily, maybe.
Okay, however you want to do it. But I'm telling you, don't go do it right now, because I
believe I'm asking, is that like, when you start talking about big time frames, should we start to then look for change of characters on a bigger time frame, such as the daily or the weekly, as opposed to the 4 hour?
Listen, I would use the daily, but you got to let me finish. If you're a profitable trader and you make money every week, it doesn't matter when you buy, because you're going to outpace any losses that are made, any drawdown that you incur as you trade. If you're not a profitable trader, you want to wait until you get this. Everybody should wait until you get a pullback anyway, because I think we're going to pull back. Once you get the pullback and this candle starts pushing up, you want to get in. I would get in closer to the bottom, like when it touches the moving average or when it touches your trend line or your zone, whatever trading technique that you are using. All right. I'm not entering. I'm not even going to look for an entry, myself, until probably May. I believe that we need to come about right here, about to this level. I believe we'll get there in the next couple of months. We'll push down. I'm probably going to sell it, but I'm not telling y'all to do it. What I'm telling you to do is wait until it pushes down to about this level. You know, maybe it pushes down 2,000 points. Maybe it pushes down a little bit further, but I'm going to look for my entry right around this area because it's going to touch my moving averages. And I'm going to look for an entry with a small position size. If I go into drawdown, I don't care. I don't care if I go into drawdown. The same way I told y'all, I didn't care if I went and draw down with the oil because I know that in the end, it's going to push up. We're in a bull market. So if I go into a little drawdown, that's fine. I can't tell you how to get a perfect entry. What I would tell you is, if you're confused about that kind of stuff, there's a beginner's trading class every Friday, and Kim covers, how she would trade from levels or zone to zone, right? I have several entry videos on my YouTube page, that everybody should be subscribed to, that they're not, but I have several videos on how to enter using a 4-hour and then dropping down to the 15-minute to enter a trade. So it doesn't matter your entry technique, and they can all be different. The bottom line is this: the US 30, the NASDAQ, the S&P, the crypto, they're in a bull market. They're all going up. And we have just started. Like this is only the beginning. You missed about 5 months of it, right? But it's going up. So it would behoove everybody who's a trader to slow down, extend your time frame out. Stop trying to gamble on your 15-minute chart. Put some money into your account. Pick up a small position because your position is going to run the same way this position, if you had picked up back in October or November, this position just ran. And if you had bought, let's say you bought in October and you went into drawdown, that was at 33,000. Bruh, right now we are 6,000 points up. We're 6,000 points up. So you would be way deep in profit, and to me, it's not really the amount of money you're making. It's the fact that you are riding the market the way that it's intended for you to do. The same way that in January, y'all remember January when we said, hey man, we're gonna buy the JPYs. Y'all remember that?
Mm-hmm.
And even me blew that trade. I did not hold my trade. I bought it, but I didn't hold my trade. And instead of being frustrated, instead of throwing a temper tantrum about not holding my trade, I knew that it was going to turn around and sell. And here's a new opportunity for you to hold your trade. You get into the trade for the sale and you hold that son of a gun. You don't get in with a 5.0 lot size. You can get in with a small lot and you can hold your trade as it pushes down. And if you believe the way I believe that this bearish order block is bearish, you're just going to hold that trade as it pushes on down, right? And this is a US dollar trade. The value of the dollar is dropping, so this trade is going to drop. And I'm just going to ride it down to wherever it drops to, right? If it drops down here, that's cool. If it drops further, that's cool. If it drops further, that's cool. I'm not pressed to have to pick a bottom. All I do is listen to what the Fed is telling me. Fed, are you raising interest rates or are you lowering interest rates, Fed? Oh, you still lowering them? So I expect the dollar to drop. We rose to historic heights. When did we rise to these historic heights, y'all? What date is that? What date is this?
January 2021,
Holy effing,
January 1st.
holy effing cow. When does this drop happen? Hello?
You said what?
When does this drop happen?
January, was it
2022.
January 2022? 1 year later.
1 year later. Why did this push up happen for UJ?
Did the dollar?
Hello?
Somebody said the war.
What war? What war happened in January 2021?
Was it interest rate? Somebody said.
Well, it was, but it wasn't our interest rates.
Whose was it?
Japan's interest rates. Japan has been in a negative interest rate environment. They opted, instead of, this is after the pandemic, they opted to control their yield curve instead of raising interest rates, which hurt their currency. That's why we pushed up. Now, if you look, we just pushed up to here. But you see this extremely dumb candle? When did this extremely dumb candle hit?
March 2022.
After we raised our interest rates, after we actually raised them, right? You see the difference?
So, so you got that notification on Bloomberg, or?
Geez, we get the notification every. Let's come on, y'all. on Forex Factory, we get the notification. We understand when these rates are going to raise.
It's just it just seemed like it's so much talk about interest rates raising and lowering that where's the real information?
I want you to slow down, because you know when the FOMC meets. You know when they have a rate decision. It's not just us. Everybody has the same few meetings. Every country has the same thing. What does that say right here?
BOC rate statement.
Bank of Canada. Rate. This is them saying what their new interest rate is going to be. And it's going to happen Wednesday. So we all know when these things happen. You might not be connecting the dots, but it's not just Canada that does it. The US does it. Great Britain does it. All of us do it. We just do it at different times. So maybe their March rate decision is their quarterly rate decision is in March. Ours might not be this month. See what does this say?
Monetary policy statement.
Okay. Their rate, this is their rate decision right here. They're either going to leave their rate at 4.5, or they might drop it to 4.25, or they might raise it, which I highly doubt. Nobody's going to raise rates, I don't think, in this environment. The next change you see is going to be somebody lowering their damn rates, not raising. But you see what I'm saying? All of us have these rate decision meetings. PT, you know this. I know you know, because a lot of times we've been in trades and it takes off going one way or the other, and we say, well, they didn't raise rates, or hey, they raised rates versus this one. And sometimes we get trade and they do raise rates, but it sells. And you'll be like, why the hell did that happen? You know what I'm
saying? Yeah, I get what you're saying, but to be honest, I really didn't completely understand the connecting, like how to connect the dots.
So how come you gotta say, how come you don't say anything?
Because you don't know what you don't know.
Okay.
You know what I'm saying?
So now do you understand?
I understand a lot better now. Not like I know what to look for now. Like I know what to connect now. Because if you don't know the dot to connect, I'm looking at this information and then, oh, okay, now it's making a lot more sense. understanding, like, because I remember we talked about this stuff before, but you know, it's just like learning the language. You might not understand the bigger terms exactly, but it's coming together, and now you're like, okay, understanding market structure also, because for me, knowing like when interest rates rise or lower, I couldn't connect the dot properly to the chart because I didn't understand market structure.
Well,
does that make sense? So
that makes sense. But this is a better way to look at it. It doesn't really matter your market structure if you're trading in a direction. And this is why
well, you can get blown out.
Well, I know, but that's the only way you get blown out is because you're over leveraged. You're over leveraged. So if I understand that I'm in a no interest rate or interest rate lowering environment, I would expect the indices to go higher. So it doesn't really matter when I buy those indices. I might buy the indices and it pulls back a little bit, but it's still going to go higher. So I just have to make sure that my leverage is low on my position. Now, listen, ideally, I can marry up the market structure along with the fundamentals, and I can get the perfect entry and I never hit drawdown and I go straight up. That's ideally the way it works. But I can guarantee you that 99% of the traders won't be able to do that. So with that being said, if you understand the environment and where your money should be put, then you can put your money there and not really worry about the drawdown, right? The same way you do with the Social Security that gets taken out your check that you have no control over. And your
I hear what you're saying after the fact of myself in my head learning, but it at the time, from a person that's coming from where I was coming from, it would be like a person like me would have been not only too afraid to get in the market where you don't understand structure, because you don't know where to even place the trade. Because even if somebody else posts a chart, like Ant could post some chart about Bitcoin 3 months ago, and I'm like, I don't know what he's talking about. Why would I even get in? I don't know what he's talking about.
Well, I know, but you're in a group with Ant, and you should ask questions. Everybody, that goes for everybody. Everybody should be asking questions if they don't understand information that's being brought out, because you're never going to learn. And the purpose of you even being in this group is to put you around other people who are doing the same thing. I'm not going to be good as trading as an Ant or as a Kim or as Sean. I don't know every crypto that's hot. That's why I'm in a group with Sean who has his ear to the ground in the crypto. I'm in a group.
And so that's why I said like now, like first, doing things in order, like, okay, before I go and dive deep into the Mexican dollar and all these exotic pairs and pairs that might blow my account or blow somebody's account so fast, not knowing what you're doing, especially if you know that you might have a problem with greed. You need to go back to the basics, talking about me, and get market structure under control so that you can pull it together and put the pieces where they go.
Listen, I agree with that. I am all for everybody getting market structure under control. But what I'm talking about now is I'm talking about a general direction of the market, having an understanding of what's going up and what's going down. Fundamentally, the same way you have a general understanding of when to buy a vehicle or when to buy your shoes.
In a year's cycle. So that helps bring it to light.
Price. You might not get the best sale price, but generally speaking, you're going to get the best price for an item that you can get at that time, right? You're not going to buy a car when your interest rate is 16%. You're going to wait. You might get your interest rate at 6% or 7% if you just wait because you understand the market cycle. That's all I'm saying. I'm not.
Yeah, that thing that you posted yesterday, when we went over the cycle and so that we can actually go back to look at the year chart and
Yes.
break it down in the months, like on the monthly, so that we could go back and know what we're looking at and be like, oh, okay, that was great. I think whoever might have missed that's a really good thing to note down and take down in your notes, like what the cycles actually are, like January, or what is it, October through whatever.
Oh, the one that Kim wrote down basically what she was looking for.
Yeah.
Now listen,
That was good. That
is great, but I want y'all to understand that what if it's a month off? What if it doesn't happen that month, right? So
yeah.
That is a generality. It's not a stone type thing.
Right.
Just the same way I tell you, hey man, if interest rates go up for the dollar, the price of the dollar is going to go up. That sometimes when the interest rate go up, the dollar sells, and it just needs to pull back before it started going up. So,
and that is where structure comes in. So then you won't be tricked and then psyched out, and now your psychology is all messed up because you're like, okay, I thought it was cycles. Now you can see, like, okay, they said there was raising interest rates, or they said they was doing whatever, but we didn't see that change of character on the daily until 3 weeks later. Okay, February 1st, there it is.
But that is why my brother brings up a great point when he's saying you should DCA, dollar cost average. Does everybody know what DCA means? Does everybody know what dollar cost averaging means? I don't want to insult anybody's intelligence, but this is the time when you speak up and say, I don't know what the hell that means.
No.
Okay. Nope. DCA, dollar cost average. And I mean, Sean, Sean, are you there?
Yeah, I'm here.
Go ahead. I mean, go explain that.
Pull up that 1 month Bitcoin chart. And I'm going to explain it essentially candle by candle. Okay. So you guys see that Fibonacci on that price action? You see when price pulled back to the 80% line. Okay. So as an example, let's just say I have $5,000 that I want to buy Bitcoin with, but I don't know where the exact bottom is. I know we got a 78.6 pullback, but I don't know where the exact bottom is. And I'm afraid to go and draw down. So ideally what you do is this month, maybe you put 250 in. Next month, you put another 250 in. You bought it higher. The next month, you put another 250 in. The next month, you put another 250 in. You see what I'm saying? DCAing is averaging out. You have X amount of dollars to invest in whatever you're investing in, but you don't put it all in at one time because you're afraid to go into drawdown. Now, if you don't care about drawdown, you can put it all in at one time. But if you're afraid that you'll invest or drop your money in it, and then it's going to pull back, 30%, 50%, that's why you DCA. So you can get an average. So I don't want to take over the class, but my frustration with the group sometimes is like how you were talking about market structure a while ago and not knowing when to get in, et cetera, et cetera. I know you know how to use a Fibonacci. So, and I know you know what 78.6 means. So you see that, and part of the problem with most people in this group, in my opinion, is this. You have some people that are in here that are good traders. They can trade those lower time frames. They can make a bunch of money. Most people aren't there. So if you are not there, you need to be looking up higher. Because when you're looking up higher, the market is a lot more forgiving. It takes longer to make your money, but the market is a lot more forgiving if you have a bad entry. There's a lot more reaction time. So the point is, you move up higher, you got a lot of time to DCA into this, and then when it takes off, your money multiplies fast. I know it's sexy to trade the 5-minute chart, but most of us ain't sexy, and it's okay. Stop trying to be sexy. Make yourself a little money first, and then try to be sexy. So The higher time frames are there for a reason. If you get a sign on a higher time frame, it's happening. If you get a time on a sign on a lower time frame, maybe it does, maybe it doesn't. So what I would say is DCAing is a little at a time across, weeks or months or, whatever that time frame looks like for you. That's essentially what DCAing is. So I know you understand 78.6 and that kind of thing. So let's give yourself credit. I'm gonna get my wallet. I gotta go get it. Let's give yourself credit for knowing what you know, and let's not cop out and act like we knew nothing when we probably knew more than we're willing to admit or we're giving ourselves credit for knowing.
You know what I thought, which is, I don't know why I thought that we needed more money to be able to trade a higher time frame. Like,
no,
that's a lie.
No, you don't.
Yeah, that's what I don't know why was the false narrative that I was thinking, like, oh, you'll need to have more money, like to start to like 1,000 to put in.
No, you don't. And here's the other thing. One last thing that I would say about trading. A spot trade is a 1-for-1. I know everybody's in love with leverage because they want to 5x their money, 10x, 100x, whatever it is. When you don't have very much money, you should be probably closer to spot. It's okay. Give it time, have a little patience. Your money will grow. So what I mean by spot is like how my brother was talking about that oil trade a few months ago that nobody wanted to take. How I was talking about this Bitcoin trade that nobody wanted to take. So if you spot into it, that means low leverage. And that means however the market wicks and gyrates, unless it really, the bottom really falls out and it pretty much goes to zero, you're not going to get wicked out of that trade. And when it takes off, you're going to move into profit. And then as it takes off and hits certain landmarks, referring to that market structure that you were talking about, then maybe you add another low leverage position. And then as it continues, you add another one. Then eventually you close out some of those low leverage ones, and then you can start upping your leverage on the new positions. The key is to have patience and control your leverage.
Yeah.
So really, look, this is an example of a spot too. This 2-month candles that we're trading for these JPYs. If you had got into this trade this week, you could have, it doesn't matter your lot size, 0.01, 0.02, 0.03, right? Whatever you decided to get in with, you're way in profit, guy. Like, you're in profit. If you should still be holding your trade or whatever. You're in profit. Even when this pulls back next week, where is it pulling back to? You're going to pull back and still be in profit. But even if you go in drawdown, it's not pulling back past where it dropped from. It's just going to pull back, and then it's going to keep pushing. So when it pulls back, what do? You add another low leverage position. You know what I'm saying? And it's the same way we were supposed to do in January. If you had got into this trade right here in January, you never hit draw. Even if it pulled back and you added another one. Even if it pulled back and you added another. 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 Up here, you could have got out, or let's say you'd have lost this last position. You didn't lose this one, this one, this one, this one, or this one. You understand? So the problem with people, me, myself included, is nobody wants to be the patient trader. Nobody wants to be him. But the real money can be made. If you had a 0.01, you can go back and do your calculations. If you had a 0.01 and you added every time up, now maybe you can trade with a 0.02 back down, because it's just going to come back down. This was the bearish order block. This was a tap into that bearish order block. Now we're pushing down. I would probably say that we can target this low, then we can target this low, then we can target this low, however you want to do it. If you're a higher time frame trader, if you're somebody like Kim or somebody that subscribes to that trading style that Kim uses, maybe you're not targeting all these lows. Maybe you're targeting one low at a time. All of it is fine, guys. But the point is, Kim is trading a lower time frame than I'm trading. I'm trading that 2-month time frame. So I'm targeting these lows. This is the first low that I'm targeting. I believe that we're going to keep going lower. This is a US dollar trade. They're going to lower interest rates. The dollar is just going to drop. It's not going to raise, it's going to drop. So this is what I believe, and my belief is based off the fundamentals. So this is what I'm trading. So that being said, I don't have a problem with holding my trade. Now, whether you trade back and forth, that's a personal decision. But if somebody is a novice and you know nothing else about trading, you know that you're selling the dollar based on the fundamentals, and you can marry those fundamentals up with the market structure that you're learning in Kim's class. So however you want to do it, however you want to look at it, if you just trade it down to this low this week and you took your profit, geez, man, you made right now 341 pips. At its peak, you made basically 399.6 pips on that trade we called this weekend. Now, if you're not taking these trades, I can't help you other than that, right? Like, I can't hit the button for you. You have to hit the button, and you have to be disciplined enough to let the trade go to your TP. So if you believed that this trade was a sell, right? Like I pointed out, based on this 2-month chart, if you believe that, then you're still in the trade. If you didn't believe it and you just wanted to take a short-term trade, maybe you didn't trade on the 2-month chart. Maybe you trade based on the 4-hour or whatever. On the 4-hour, I got the chalk here. I got the break of these lows. It pulled back. Maybe you would have taken it down to this next low. That's fine too. You won that trade. Maybe you look for the EJ trade. All of them did the same thing. But the point is, you have to trade what you see, and you have to be disciplined in your trade. You don't worry about how big the lot size is. You're worried about being a participant in this trade as it pushes down. When it pulls back, if you believe that we're trading down here, you're going to get you another position. It could be another 0.01 or another 0.02 or 0.03, whatever you're trading. And you let the chips fall where they may. When it comes down here and hits your TP, you will have whatever amount of money that you had and you got from those positions every time it pulled back. We're going to get a pullback. It's going to push down. We're going to get another pullback. Maybe you'll get 2 or 3 positions by the time it comes down here to the TP. You'll get out the trade. You'll have your money. Now you're ready to put this money to work in a different area. Does that make sense?
Mm-hmm.
And this is how we should cycle our funds through and trade. This is how we build our portfolio and our the value of our account over time. If you're in here trying to gamble for 15 minutes at a time, you're probably going to get clipped 15 minutes at a time. But if you're trading a higher time frame, yes, it's going to take longer for you to hit your TP, but your money will damn get there. It will come. Just like this push down right on schedule, it's going to keep pushing. It'll eventually get down here. We don't know the when, but we know it's going to happen according to the higher time frame.
I mean, I know I keep harping on that Bitcoin chart, but look where Bitcoin is now and look where it was when I brought it to people's attention in this group. And that's a 1-month chart. So if you believe all of this stuff is fractal. The same way you get that 80% pullback on a 4-hour chart, on a 15-minute chart, on a 5-minute chart, and you take it up to that negative 27, and that, what's that red line above the negative 27, Watu?
Negative 61 or 62.
Yeah,
61.
same. All of this stuff works on every time frame, is my point. So you fucked off the rock. You didn't get in when it was down 80% from its all-time high down in the $15,000 range. It's going to the negative 27. It's already busted all-time highs. It's going there. It's, in my opinion, it's going up higher than that. I think it's going off this chart, to be honest, but let's take it one price target at a time. It's going to the negative 27. So you either believe or you don't believe.
And you don't believe.
I mean, it's smart money concepts. You either believe it or you don't believe it. But I'm telling you, it's going there. I don't know when it's going to get there, but it's going. Pull up Solana, too.
They don't believe.
Pull up Solana. Look at Solana. It had a deeper pullback than 80%.
But most of them wouldn't have known about Solana either, anyway when that pulled back.
They wouldn't, but the point I'm making isn't necessarily about the asset, it's about the price action and the use of the Fibonacci. That's really what I'm trying to illustrate here, you know.
And you got to believe. If you don't believe in financial cycles, you can't put them to work. If you don't believe in the techniques, then you can't put it to work. I know it sounds funny, you know, when we say you don't believe, but Dion is right. Oh, you don't believe. You know, a lot of times, man, you know, somebody will bring a trade idea. Either you believe it or you don't. And if you do believe it, you trade it. And if you don't, you don't. But this is all cyclical. It's going to happen over and over and over again. You might not get the same parabolic move, right? Like maybe Sean is going to catch 100x of his money. And when you catch it, it might be a 2x. But the point is, if you understand the cycles and what that means, what raising interest rates means, what lowering interest rates means, if you understand those cycles, you'll understand that, hey, the Fed said they're going to raise interest rates. That means those indices are going to sell. And they're not just going to sell for a week. They're going to sell for months. So I don't need to get a 0.20 lot size in the US 30. I can go in there with a 0.01 and chill. It might go in drawdown, but I'm not going to get scared because I understand that for months this is going to drop. I believe in the fact that it's going to drop for months. Yeah, ideally, you can read a chart and you'll get in perfectly and you'll never hit drawdown. But that should not be the goal. The goal shouldn't be for you to worry about the drawdown. The goal should be getting the damn trade because you don't know when it's going to drop or how deep it's going to drop. You just know that it's going to drop. You understand that? Yay, nay? We don't give a damn.
I understand.
Boy, this stuff is gonna make you a better trader. Give you a better understanding of where the market might be going. Like the direction, to me, the direction is the most important for me. Because now I feel like I'm trading with vision. I'm not trading blind, right? If I pick a bad entry, as long as I buy, eventually it's going to come to my favor. Whereas in some trades, if you're selling this but the dollar is going down, then you're not going to win that trade. You don't get the perfect entry. The only thing that's bad for me about trading the dollar against these other currencies is those other currencies might do worse than the dollar.
It's
So-
like if TT has an F, but you got a lower F.
Yeah, you got an F minus, and then TT's currency might be better than yours.
Hey, what happened while I was gone?
So look, to me, the better move instead of buying the dollar, the better move is just to buy those indices when the value of the dollar is going down. That's the best move, to buy the indices, because we know that's going up. The dollar might actually go up against the AUD, even when the dollar's value is getting lower, because AUD is lower too. So the best move is to buy the indices or buy crypto. Right? And that's where your knowledge as a trader and understanding what you should put your money into comes in. You want to buy the dollar when the interest rate goes up. You don't necessarily want to sell the dollar when the interest rates go down. You want to actually buy the indices when the interest rates go down. That's a guaranteed play. These other plays are more subjective.
Yeah, we're gonna be looking out. Paying more attention now.
Well, to me, you got to ask the questions. I get on here.
Well, if you don't know which questions to ask now.
Oh, well, I get it. Maybe you didn't know the questions to ask, but I think every Saturday when I get on this call, I always ask, does anybody have any questions? And nobody ever has questions. And it's funny to me because we'll get into the market that following week and a lot of people are silent. And that's how I know you're not winning. Or I call you and ask you how your trades went and you had too much work to get in the market. That's how I know your trade ain't right.
Shut up, bro.
I'm serious. This is not a labor-intensive thing. This is just a basic understanding thing. And the concern is everybody has the opportunity to win, but if you don't understand that opportunity, then it's not benefiting you. Like, this is an opportunity that's going to last as long as the U.S. financial system lasts. So it's better that you have a understanding of that now than to wait, until you're 75 and like, dang, I wish I had known that. Or I wish I had understood that.
But I understand it now that I only got 2 years to live.
Exactly.
Oh, well, that's where it's headed.
Stop.
I fully understand it. We'll die tomorrow.
No, you'll live for a long time to see 112.
Yeah, but you got to figure it, TT. We've been on this. How long have we been a group and having these Zooms?
2020.
I mean, it's been a long time.
The way I look at it is we've been in this group for almost 4 years. So we're all in the 12th grade now, but it's like you had a question in, I don't know, English or algebra class back in 9th grade. You didn't understand something. You was just like, fuck it. So now we're in 12th grade getting ready to graduate. It's now finding out you don't know how to read, you don't know how to.
I'm done.
You know what I mean? But that's how you got to look at it, though.
Well, I'm asking questions, so hopefully, I'm improving. So I'll be trying to ask questions when I know what I'm saying.
But TT, I'm not talking like directly to you to put you on the spot. What I'm saying, general statement for for the group, because you're not the only one in the group that shows up regularly, that doesn't understand stuff, but, you know, remains silent, you know. So what I'm saying that really for effect for everyone, you know. I mean, if there's something you don't know, you're never gonna understand it or begin to understand it if you're just like, fuck it. I mean, if you're just like, fuck it, I don't know why you would show up every day or every week or whatever. So anyway,
No
that's
question is a stupid question.
I mean, it's really not. It's really not.
And here's the deal. When I look across the participants list, I see only Black people. And the thing that sticks out to me most is I grew up as a Black person and I had Black friends my entire life. And what I understand about Black people that's universal is nobody understands this. Nobody. No NIWGA in America, no NIWGA in Germany, no NIWGA, nowhere. I've been to Korea, I've been to the Philippines, the Marshall Islands, Germany, the US, Iraq, Bosnia, and I take that back. One Black person when I was in Iraq understood the market. He understood how to trade. Well, actually, he didn't understand how to trade. He understood how to invest. But most of us did not grow up with a working knowledge of any of this. And now we get on this call in this group, and you regents, that's NIWGA spelled backwards, you regents act like you're too embarrassed to show your lack of knowledge. This is not a group judging any of us. This is a group trying to promote this knowledge to all of us. And for us to be able to take this knowledge to the people we know and love and educate them. Because one thing that I understand completely is that no poor person in America is ever going to get out of their poorness by working. That's not going to happen. I had a job making $150K. And I looked up and I understood, man, I'm still never going to be free. Never. Because they tax the hell out of you. There has to be a better way. And this is the better way. But if you don't understand it, it's not going to work for you. And if you're too embarrassed or too proud to say, hey, man, I don't understand what the heck you're talking about, it's never going to work for you. So I just want to encourage everybody to say, man, hold up. I don't understand that concept, or I don't understand what you mean, or I don't understand what I should be looking at. Because when I first started trading, I really believed that I was just supposed to try to win one trade at a time, right? And to me, that's a bad way to look at trading. That's not the right way to look at it. To me, the right way to look at trading is, hey, I can look at this as an investment tool, like as a way to grow money. I go plant my money, my seeds out in the yard, and I can grow it over the course of a few months. And the better I get over those courses of a few months, now I can, every now and then I can take a little bit of this money and try to grow it short term, to catch a trade short term. And the better I get at understanding that over a long period of time, I can bring that to the shorter time frames, and I can make money consistently on those shorter time frames. So maybe everybody doesn't see it like that. And that's okay if you don't. But I'm just telling you, I've had more success over those longer time frames than I've had over the shorter time frame. So I believe that if we all understood that, hey, man, for the next 9 months, we can buy the indices, that makes for a better trading experience. Because now I know I can go into my unregulated broker and I can pick up a position in the NASDAQ mini or the S&P mini or the US 30 mini, and I can just hold that trade for months and months and months. If I got a $500 account and I buy a 0.10 in the mini, shoot, I'm good. I'm good.
Mm-hmm.
I can go to work forever. I can work my A off for months at a time and not look at my chart and know when I come back I'm gonna be winning.
Yeah. That is a big thing that I just learned that we all just talked about over the past couple weeks.
So does anybody have any questions over anything that we just talked about?
I have a question. Why can't we trade the US 30 as US residents on regulated broker accounts?
Are you serious? Because you can make too much money. The leverage. All right. So my brother talked about spot trading versus leverage trading, right?
Yeah, and I didn't understand the spot thing, and I asked the question, but it didn't get answered.
Okay.
You can hear you.
Let's talk about spot trading. You're trading with very low leverage, or basically 1 for 1, right? If you put $1 up, if it moves up, you win $1. If it moves down, you lose your $1. Right? You're not trying to crank up the leverage and use your $100 to make $6,000. Does that make sense?
Yes.
Okay. So if you're spot trading, right, you're getting in at basically a certain point in the market. All right, let's look at this. Let's look at this monthly chart. The market pushes up. It pulls back. It doesn't give you a 78. Maybe you got in at this bullish order block at the 62. Maybe you get in and you're trying to hold this trade to the negative 27. Or worst case scenario, smart money, you're just taking this trade to the top right here, to these highs. And you're going to get out. You're going to use a low leverage position to go from here to here. And you just put your TP in, you put your stop loss under these lows, you put your take profit here, and you live with the results, right? You don't care when that happens. Maybe it happens this month, maybe it happens in 2 months. You get your winnings and you go to the next trade, right? You're not trying to hop in and out. You're not trying to.
Hold on. Sure. Her question was, why can't you use leverage on the U.S. brokers, right?
Well,
is that correct?
No, it was why can't you trade? Those were two different questions. The explanation
I'm
about spot. Okay.
Go ahead.
So now you're going to take this little profit you got, put it back in your account, and you're going to take the next trade, right? That's basically a low leverage position. Now you have people who do the same technique. Instead of using a 1 month, you go down to the 1 minute chart, right? Let's say this is a 1 minute chart and you're trading the US 30. First of all, you're not actually trading the US 30. You are trading a contract for delivery, right? That means that some broker offshore doesn't have hasn't purchased any stocks, hasn't purchased anything in the US 30. All we're doing is taking those numbers and they set up basically a gambling pool with the numbers that are the US 30 numbers, right? So let's say let's go to the US 30 chart. We'll look at it. All right. We use the real numbers on the US 30 chart. See all these numbers? Right now, the price is at 38,733. So this broker, whatever broker I'm with, they use these real numbers, but they have no direct ties or license to use these numbers to collect money or distribute money based on these numbers. Does that make sense? So they get to use these numbers and they get to trade contracts for deliveries using real numbers, real time for the US 30. And they get to allow you to use leverage to trade these. They'll never pay the SEC or they'll never pay the US 30 for using these numbers. So they can make a fortune by trading contracts for delivery at specific prices. Does that make sense?
You're losing me with the contracts for delivery. I'm not familiar with that.
Okay, okay. You can Google what that means, but let's use real life stuff. Okay. So you know what the NFL is, right? National Football League.
Yes, American soccer. No, I'm just kidding. Whatever. I mean, I got you. Yeah, I'm just playing.
Okay. So let's say you're a great sewer.
Got a motherfucking comedian.
No, let's say you're a great sewer and you can sew uniforms and hats and paraphernalia, right? And let's say you know a bunch of fans of the NFL. And instead of you going to the NFL website and buying the items from the NFL at those high costs, let's say your friends come to you and buy them and you sell them for a fraction of that cost, and you're keeping all the money. Does that make sense?
Yes.
So in essence, that's exactly what's happening with these brokers, unregulated brokers.
Okay, so where are I get the analogy you gave, so bring it full circle for me. How are the unregulated brokers making their money?
Okay, they're trading against you. So if you put in a trade for the US 30 and you lose that trade, they're the ones that keep your money.
Yeah, but what if I only win? I mean, I know there's losses built into the game.
So many of y'all win y'all's trades.
Yeah, what if I
how
win?
How many
exactly.
I didn't hear the question.
How many people win their trades?
I don't know.
Yes, you do.
What you talking about? Like the 8% out of the 92% that lose?
Yeah.
Right.
Yeah. The same way the prop firm. How many people win their prop firm trades?
So I've actually had more success trading with an unregulated broker than with trading with the prop firms.
Well, of course you do, because if you go 5% in drawdown, they don't take your trade. They don't take your account. But the model is still the same. It's still only 8% of successful people. It's less than that get paid from the prop firm. But successful traders is only 8%. So 90% of people who are with your unregulated broker are getting paid. Most people are donating money.
That's the beautiful business model.
Yeah.
So I guess the question I would have after that is it, if I become too successful with the unregulated brokers, are they going to be like, nope, got to cut her off? Let me stop.
No, man. Like,
why would they?
Yeah, it's still even. It doesn't matter how successful
8%.
You're one trader.
Yeah,
just one. Yeah.
And Kenya, you're probably one.
Don't
trader.
know me. Don't know who it is.
Okay, I'm sorry. Hey, listen, you're one trader. Listen, you're one trader that's taking. Let's say you take $200,000, but me, I myself have brought $57,000. Me, one trader. So if you get 5 of me, I covered your wins. You understand what I'm saying?
Yeah, it makes sense.
This is just 5.
I guess so they only make money if people lose?
Yeah. So, ain't that great? So listen,
they got way more people that lose.
iPhone. Let's talk payday loans. The payday loans, people only make money when you default. But it's a bunch of them popping up.
Like, I didn't know that.
Yeah.
But Kenya, that's why they fuck you on the slippage.
Yeah.
And the fees.
The slippage your ass out of the trade.
Slippage. Okay.
That's what's going on.
It sounds so terrible. This sounds horrible for the people who are not profitable. Like,
it is. It is. But listen, this is the same thing. To me, it's the same thing as those hedge fund dudes that manipulate the market.
It is the same.
And it's legal to do that in America. And they go give the news stories about what they're manipulating. It's legal. And then you go buy it because they put $5 million, they put a $5 million buy, and it shows a bunch of volume and the price spikes out. And then you as the individual trader, you go buy it because it spiked out. and then they put $10 million to sell it. And they just wipe you and everybody else who was quick to hop in that buy. They wipe all of y'all out. And they go to the bank. It happens all the time, man.
No, I got it. That's the manipulation and the liquidity. Like I got it. And I think I started to see success in my trading when I had to I had to think for the masses and then like take 2 steps ahead. Like think for the masses, think for the banks, and then find where I fit in and not necessarily trade with the masses.
Yeah, it's a reason why they always say do the opposite. Everybody. Sean, remember me and Sean was talking about that. Remember Friday, Sean? When you I'm gonna buy that the NASDAQ. And I'm like, yeah, but it's gonna sell.
Yep. Went right into that liquidity, grabbed it, and sold.
The market pushed right up. I knew it was going to. In fact, me and Sean was talking right here when it was these double tops. I said, man, that thing going to sell, Sean. And it hit Sean's TP. Look at that. Boom.
Okay, so next question. If I want to trade the US 30, does it make sense for me to learn how to trade futures and just start trading futures?
Well, the same thing can happen to you in futures. So here's the difference, right? Here's the difference. When you trade your US 30 on unregulated brokers, you can control your lot down to the 0.01.
Right.
You trade contracts, you can't. You got to trade that contract. Now there's
at least one. Yeah.
Yeah. So there's a mini contract that you can just trade one of, which is cool. But you have to understand that those contracts expire, right? It's just nuance, right? It's nuance. And everything is taxed, right? And when you pay your taxes in the US, you're going to probably get taxed per trade. So, they're going to get you.
They try to get you anyway, right? Like even if I make a killing on the unregulated brokers, it's up to
but let's talk about
that, right?
Well, but you can control that because the way you control it is you only bring a little bit in at a time, so your taxes aren't as high.
So wait, okay, elaborate.
Okay, so if I'm trading on an unregulated broker under my LLC, my LLC, I could be a consulting company or whatever, right? I can bring in a little bit of money at a time, as little as I want to, or as much as I want to, because it's crypto payments, right? So when I send payments from my broker to my crypto account, I have to onboard my crypto into my bank account.
Right.
And I can do that as little or as much as I want to at a time. At the end of the year, I'm paying taxes. It doesn't mean I got to bring $200,000 into my business. I could bring $30K over the course of that year. I could bring $40K over the course of that year.
And then where's the rest of it? Just still
in my crypto account.
Yeah. But don't they make you report your crypto earnings now?
Man, please.
Oh.
Man,
I thought I saw that question on TurboTax.
There's no regulation on that. It's coming.
Yeah,
it's
eventually
coming.
they will.
But yeah, we don't have laws. That's why they don't want the ETFs, and they're on TV telling you how much crypto is a scam, because they don't have regulation in place to track it so they can appropriately tax you on it. It's on more of an honor system at this point.
Exactly. Eventually they will have it, but I'm gonna tell you like this: they tell you not to do this, and there's rules that you can't do. Like you got to pay into the Social Security system. How come the Social Security system ain't buying crypto? The U.S. government is buying crypto.
Mm.
Like a lot of stuff just doesn't add up. And instead of y'all arguing and cussing these people out about that kind of stuff, I always see arguments about Trump and Biden, like a couple of 80-year-old dudes. Come on, bro. Like, it doesn't matter who the president is. The financial policy ain't gonna ever change to help the broke people. They're not going to school teaching what we teaching on Saturdays here. If you really wanted your people to be financially free, wouldn't you teach this to 12-year-olds? Before they developed all the bad habits? Wouldn't you show a 12-year-old, hey man, you want that new bike? Oh, whenever Powell says he's lowering interest rates, you put $100 in the NASDAQ. Don't worry about it, son. Just play all summer. You know what I'm saying? How come you don't do that?
Instead of sending 12,000 credit card offers to the doorstep.
How come you can get unlimited student loans, but you can't get a loan for a house?
Crazy.
You know, like all this stuff is by design, guys. It's by design. And the stuff that we argue about is by design. You know, how come I gotta, when I go to my social media, you know, I gotta see a sexy red video, you know, her shaking her booty or whatever. How come I'm not seeing the stuff that's going to assist me? All of it's by design. And it's okay, you know, once you understand the design. But, you know, for my problem with the group is we've been here long enough we have to understand that we got to build a system that works for us. And it's not about winning that one trade on that 5-minute chart, right? Maybe you're great on the 5-minute chart, but what kind of system have you created that's going to help you get from point A to point B? Once you learn how to execute a trade and win a trade, okay, that's cool, that's cute. But how do you get from winning a trade to growing your finances? Right? How labor intensive is it to be up at a particular time frame or to trade a particular session? How labor intensive is it? How realistic is that? Wouldn't it be better to win a couple of trades and then put that money to work long term? I don't know. I mean, maybe it is, maybe it isn't. Like, do you always have to be on your charts in order to make money, to grow your money? I mean, it's at some point, it's like going to work. It's just a different, you're working for yourself.
You must learn to make the money work when you are in the bed.
And you can
Which is why I beg y'all to buy that Bitcoin back when it pulled back 80%, you know, but I'm gonna quit harping on that.
So when do y'all teach the taxes and
we don't teach taxes? No.
When do y'all teach the strategy for using a business to, like, where do I learn that?
You go to a tax professional, somebody who's authorized to teach you that. You talk to a tax, it's several people that do business taxes, and everybody's strategy may not be cool with you.
And I show my hand. I let them know, yo, I'm bringing in.
Yeah, listen, they can't report. Yeah, you show. Of course, you show your hand, and you tell them, hey man,
advise you to show your hand.
He said, "What?"
I would advise you to show your hand. Yeah, they're gonna keep you in jail. You know.
Yeah, exactly. They'll tell you, hey man, you need to have a business incorporated in Wyoming that has a place in Puerto Rico. I mean, they'll tell you every advantage.
Okay.
Yeah, you ain't the only person in this country who don't want to pay taxes. I mean, all the conservatives in this country, they don't want to pay taxes. They just want the benefits of
I don't mind paying taxes because I don't mind that, right? Pay Caesar what Caesar's. What I have a problem with is I'm doing the legwork and I'm making all this money and you're already getting me for 40% on my 9 to 5. Now you're gonna get me for 50 and 60% on my.
Oh yeah, they're gonna listen. They're gonna get you for at least 40 for your trading.
Right.
So that's why you have to put it under a LLC, maybe even an S corp. You're gonna have to get creative, but the tax person will tell you what you need to do in your state. You know, I mean,
and I just need to do that before it's time to file taxes, right? Like anything that I do this year, as long as I set up the business or whatever, by the end of the year, we can structure things to where the taxes hit.
Yeah, but
properly.
There's another part that you're not considering too, Kenya, is your business needs to be paying quarterly.
I won't respond to that.
Yeah.
Siri's so rude.
Because they're gonna fine you for not paying quarterly too.
Oh, really? I didn't know you get fined if you don't pay quarterly.
Yeah, depending on how much money you make.
But I was about to say, but is there not a threshold where that's where
But that's why you got to
kicks
talk
off?
to you. That's why you got to talk to your tax professional.
So you talk to the tax professional at the beginning of your trading success.
Well, I definitely would. Listen, they have free consultation. So you need to talk to them earlier, as opposed to later, because it gives you basically a construct of what you're looking at. Hey, I understand that if I make X number of dollars, I need to start paying quarterly. So I need to have this business constructed. I need to go to LegalZoom to establish the business. I need to do whatever, right? Like they'll tell you all of that information.
Okay. Okay. This is valuable. Thank you.
They will tell you what to do with losses, how to keep track of your losses, how you can subtract that from, your total.
But it's going to be a lot of money though. I mean, it's not, you're really going to have to be doing very well for it to kind of meaningfully.
Okay. So throw some numbers on it. Like, help me make this real for me. Help me know. Is it at 100K? Is it at 200K?
Kenya,
Is it at 500K?
Kenya, I know you. I'm sorry. iPhone, I know you ain't made no money.
But look now, Todd, you talked about this earlier about having the process and the system. I'm literally there. All I need now is.
But my point is this,
because these numbers are growing.
Okay.
They're turning. The ROIs are there.
I get you. So have you lost money? Have you bought challenges? Like all
I
that
lost money from 2021 till 2024. I lost money.
Did you file that in your taxes?
No.
Well, you're gonna have to go file an amendment. Listen, all of y'all spending these thousands of dollars on these challenges, those are write-offs in taxes.
But I didn't have a business that existed during those years.
They're personal write-offs in taxes too, can you?
But if I didn't itemize, then I just took the standard.
Maybe that's why you talk to a tax person, because they're gonna say, hey man, you need to go back and itemize because you lost this thousands of dollars and it would equate this. This would have reduced your tax by X number of dollars. Okay. It's important. Especially and maybe you don't qualify, but maybe the TTs or maybe whoever buys challenges. I don't know how many TT bought, but I don't,
about 4.
Deandra, whatever. Whoever was buying challenges on repeat and blowing them, right? And it might be Rose or whatever. Whoever you are, y'all.
It's me. That was me.
Situation. You can go back and you can look at your bank account, and it might be worth your while to deduct those. That's all I'm saying. They can't. Your tax bill might have been 46%, and then after you deduct those challenges, your tax bill might have been in the 30s. So now you got to go back and redo that. File an adjustment.
Do you have kids?
Yes.
Right. So all of that stuff is going to matter, because you get bigger breaks if you got kids as opposed to if you don't have kids. How much do you make on your day job? How much did you make in trading? So to give you a rough idea, and it's rough, you still need to talk to a tax person, is you need to go on something like Google and find your tax bracket. So I don't know, I would put in something like 2024 tax bracket, something like that, and find what if you're married, what you and your husband make combined.
And there's
going to be a bracket that says you're at 25%, 35, 40, whatever number you're at. That's a rough starting point. How much are you making trading? Add that to your job salary
or subtract.
Or
subtract it if you lost.
Yeah, if you lost. But if you're making money, to me, you're only going to be worried about all this shit really if you're profitable.
Right.
But
Well, I think the people,
this-
that's what I'm saying, Sean. I think the people who are losers don't understand that that stuff is a tax deductible.
So I get
I
that,
did
Todd,
not.
but let's follow
don't,
the
but-
logic that Sean was going, because I want to hear
Okay.
where
Right,
he was giving
I'm
rough
trying-
numbers.
Okay.
Right. So you add what you make in trading to your total salary, and it's gonna move you, in theory at least, up a bracket or two. So the one thing that I can't account for is there's a short-term tax rate
Exactly.
and there's a long-term tax rate.
And
So
you'll be in the short term, but
right. So I don't know how to parse that, you know what I'm saying? Because
Well-
part of that trading money that you're adding on to your salary, it's not going to be taxed at the same rate that your job salary is. Or like I have long-term crypto holdings that I've held for years. That's not going to be, when I finally cash that out, that's not going to be taxed at the short-term rate, So I don't know
that's why
exactly how to
Shanique said-
tax. Right. I
That's
don't know
why-
how to tax people parse that, but to give you a rough kind of guidelines or a box to color in, just add up your total income and go find it on that tax bracket. And that'll at least give you a ballpark idea of what you're going to be on the hook for.
But
And then that's when write-offs come in and some of the other things.
So listen, it's
One alpha code, 1 2 alpha.
what you're saying is correct, except if you're trading with a prop firm, Kenyon, you're not.
I'm not, because the last one I was dealing with, they told me they don't sell accounts to US residents anymore. So I said, you know what, F y'all, I'm just gonna trade my own money. And I've only seen success from trading my own money.
But you're seeing the success with an unregulated broker?
Yeah.
Okay, so definitely talk to a tax person, because your tax person is not going to let you trade, not let you file those trading gains as an individual. You're going to, your tax person going to tell you to get a company, and probably.
And I mean, I have one. It's not.
Well, he's probably
set
going
up
to
for
make you
trading. It's set
Well,
up for something else.
He's probably going to make you set another one up for trading, and then S corp. He's going to probably have you put that trading company under another company.
So I thought the trading company, like, don't you have to get like all these types of licenses and stuff? So you have to like learn.
Listen. You could be a consultant. This is why you got to talk to a tax person, because
I got you.
They're going to understand how to structure everything for you to benefit. That's why we're not legally allowed to even discuss this with you, right? Because we're not licensed, and we're not tax people.
Yeah,
but they know what to do.
Right. So that's why I use terms like rough estimate with those tax brackets. It is going to be different for the reasons that he discussed. But if you just want a ballpark starting point to give you an idea, you must go find your tax brackets, and I would just add my stuff up, and kind of, now you're in the ballpark. It's not going to be exact because of all the shit, businesses and so on and so forth.
And I'll just put this out there, Kenyon. When I talk to my tax guy, I don't know any American trader who traded with an unregulated broker that got short-term gains, right? Only Americans get hit with that. I mean, only people who trade with U.S. regulated brokers get hit with that.
No, restate that.
Okay.
I guess I didn't catch that.
I don't know any traders who use unregulated brokers.
Mm-hmm.
They had to pay short-term
short-term gains. ...
Because they're only paying on the long-term gain.
That's
right. Because their guy has told them
the tax guy shows them how to avoid that. Only people who trade on U.S. regulated brokers like TD Ameritrade, Robinhood, those you're going to pay your short-term gains, and because there's no way around it in America.
And your short-term gain taxes are on
Very-
top of your long-term
Well,
gain
they're just a
taxes?
lot high. They're a lot higher than your long-term gains
Oh, okay.
So
because
think of it like this. You make money on your job. Let's say you had some long-term trades, you know, you're going to pay 20%, I think is the number for your long-term capital gains. Like if you had an investment or if you held a trade, you know, for example, for more than a year. Then you're going to have that shorter term shit where y'all like to run up the bag and think y'all are the shits, you know. And let's say you I don't know, you make $200,000 in the short term on short term trades.
And short-term is anything less than a year?
Yep.
Right.
Okay.
You're going to pay, I think it's 40% for short term capital gains
it might
tax.
be more than that, son. That's what they be trying to get you, boy.
Or maybe it's more than that. But the point is you're going to pay a higher rate. So that's enter your tax dude. So he's going to advise you and tell you whatever he needs to tell you to lower your tax rate, you know. So that's why I say find your tax bracket, add up all your shit, and it'll get you in the ballpark. But that dude is going to be able to advise you on the best way to make it to where you can pay the least amount possible. I don't have or the skill set to tell you that.
And Kenya, here's a good example.
Yeah, what am I looking at right here?
Well, this is the short-term your short-term gains tax in 2023. It's more now. But
so this is anything that I gain on top, like separate from my job.
Yeah, this is going to be separate to your regular tax bracket. This is short-term gains tax.
Yeah, anything like trading, investing that you made
and you held less
than a year. So Kenya, are you single? Are you married, filing jointly? Are you married? What are you, Kenya?
Married, filing jointly.
Okay. Did you make between 11,000 and 44,000? Did you make 231 to 578? What did you make? You don't have to tell us, but that's
this is what you would be looking at. So if you made, let's say you made 20K to 89K, you're going to pay 12% on that amount. This is outside of what you pay for your total tax bill.
So, okay, so I make $50,000 and then I pay the 12% and then I'm off the hook. I'm done. I can spend the rest of that money. That's my money and I'm done.
Well, this
yes,
is just your
really
capital gains.
Tax do that. Yeah.
Yeah, this is just your capital gains.
Right. That's what we're talking, right? I make 50,000. I'm not talking about my income. I'm talking about I make $50,000 from trading with my unregulated broker.
But the reason why you got to talk to your tax dude, because I think the way they're going to do it is they're going to add this additional amount with your total taxes.
They are going
and
to.
You're going to pay total taxes, what you pay, and then you're going to pay 12% on the amount that you make.
So I don't know how they do that math though, but he's generally right. This is going to get added to what you make on your job.
It gets double taxed basically.
Yeah.
Right. So that's why I keep saying, using terms like ballpark.
Right.
You know, you pull up this stuff and get yourself a ballpark idea of what you're going to have to do. But that guy is going to be able to tell you and advise you on what you need to do to pay the least amount.
Right. And it's still, regardless, it's going to be quarterly because it's being done through a business is probably what they will advise.
Depending on what your business.
It depends on how much you're making. It really depends on how much you're making.
Yeah, most of the time, if you have a good tax guy, your business ain't gonna make money for the first 3 years.
Oh. Okay.
That's why you got to talk to a tax guy. Maybe,
So when does
you got to take business trips? Maybe
what threshold do you start paying quarterly?
Oh, sweet baby.
And I'm generally speaking.
I don't know, but I think it also depends on what state, you know. So maybe it might be 40K, maybe it's 20K in Alabama, maybe I don't know. But
all of
this stuff matters. But go ahead, Sean.
Do you have a state tax, income tax?
Yes.
If you don't, then the state doesn't matter. If you do, then it potentially does matter. You know, so again, like we sold a house one year and we cleared like, I don't know, 100,000 roughly. And, you know, we didn't realize we were supposed to pay this quarterly tax bullshit, you know, so I don't know where the threshold is. You know, if you make X, you got a quarterly pay, you know. In my experience, if you make 100, you better be asking, you know.
Right.
You should ask anyway, just so you know. But I know if you make 100, you know, then you need to be asking. So, but all of these individual circumstance, you know, kind of things are why you have to talk to the tax guy yourself.
And they're very good because they're going to call you, Kenyon, and they're going to say, hey, you need to take a business trip, or you need to buy a vehicle. You need to, they're going to say that kind of stuff because they're going to keep the money in your pocket.
And you find the best tax guy through rich friends who have a tax guy, or you
that too, or you can go online. Yeah, I mean, you know, maybe you don't have rich friends, but you can go online and look up business tax consultant, and it might be 4 or 5. Call all of them. They're all going to have a free consult.
Well, shit. I mean, we just paid a whole bunch of money to a motherfucker. We didn't get no free consult.
I don't know why y'all didn't call it. Look it up. That a lot of them have the free consult.
You just got raked over the coals, Kenya, paying an accountant, you know, for this very kind of thing, you know. So, but if he knows a free consultant or whatever, hey, bark up that tree too.
Thank you. I appreciate all of this. Thank you.
Oh, I'm sorry, iPhone. Yeah, it's all good, iPhone.
You didn't already said my name, my state, my life, my marital status, my tax bracket.
Hey,
we don't know
my
your
social security number too.
We don't know your tax bracket. all we know is you making that.
It's on the screen.
Well, I know it's on the screen. Which one is it?
all we know is you're making that big money. Man.
Yeah, we know you're a successful trader and you're making that big money on your job. You know, that's all we know.
Yeah, hey, we understand. We understand you in one of them handout positions. You know what I'm saying?
Consistent profits.
Hey,
try to walk it back now.
Hey, I'm proud of you.
I said, well, look, y'all telling me how to file my taxes. I'm showing my hand here. I am new to this. I'm new money, and I have large projections. So this information in March is very helpful.
Yeah, but you know, Kenya, I'm also telling you that because I know you and your husband were trading, and there might have been some losses that were taken that you can take advantage of, right? Even with an amendment or an addendum. You know, like all of this stuff is important because you don't know until you look at it. You don't have to pull the trigger on filing an amendment, but maybe you look at it and you be like, man, bruh, that's $5,000 that they owe me.
I feel like the way the projections are set up, is no need to look backwards. I'm not trying to turn into a pillar of salt.
Okay, all right. You know,
but tell us about it.
Make sure you run this by your husband because he might need that $5,000 to put in his account. You know, all I'm saying.
I'm gonna talk to the tax guy. That's like the most critical piece of this conversation that I took. So thank you.
There you go.
I would have thought that the most critical piece is your ass should have been spot buying Bitcoin, you know.
You know what, Sean, where I got messed up was I listened to Todd when he said it's gonna go down to 12,000. So I was still waiting on it to go down to 12,000, didn't fib the move and didn't realize we were turning around at the 78 and missed that boat.
Mm-hmm.
Hey, King, I'm sorry you missed Bitcoin, but since you listening to Todd, I know you're in oil.
No, my husband has been in my ear saying we need to get in oil. We need to get in oil, and I'm like,
I like the way you missed the move because of Todd, but you didn't get in oil because that's crazy. You know, it always worked like that.
Kenya, it's not too late.
Yeah,
it's not too late to get in Bitcoin, but I think there are better opportunities. You're not going to lose money by buying Bitcoin, but there are definitely better opportunities. And You know,
See, and then y'all, like, I've been focusing on trading and understanding trading and learning trading. It feels like now y'all are trying to make me jump to the next thing, which is turning the page in my portfolio and invest.
No, Kenya, it's still a trade. What are you talking about?
It's all the same. It's just,
it's not quite like maybe to y'all, but like
what's
going
different?
back to like, no, but going back to some of the stuff that TT was saying earlier, like you don't know the right question to ask to answer to get the information that you don't know. Like it still takes time to really form that question.
Kenya, you know how to put a Fibonacci on price action and measure a drawdown. You know how to do that. You have for years.
Well, let's talk about it right now, Kenya.
Let's talk about it.
So the other day, man, I wish I had that. Hey, Kim, are you on the call? There's a picture I sent. Kim, I wish I can pull this thing up, man. Sean, did you know that picture I had of Kramer?
Yeah.
Do you have that?
I gotta find my phone. I don't know where it is. Hold
Well,
on.
maybe I can log on. I can log on my phone. Hold on, y'all. I'm gonna log this on real fast.
Hello, Mason.
We're looking at the US 30, and I'm expecting a pullback. You know, we've been going straight up pretty much. Okay, we've been going straight up pretty much, and I wanted to pull a photo. Zoom. How come I can't share my screen? Let me see. Okay. Does everybody see my screen?
Yeah.
Yes.
Okay. This is a chart. This is what they call the Larry Williams indicator. And I was watching Mad Money the other day, and Kramer throws this chart up. And it's basically saying that there's a pullback that's due in the middle of March. And that even this is a bull market, but the pullback is going to be a pretty deep pullback, and then it'll start buying again in May. And you know, I got to thinking, I'm like, man, that we are due a pullback. You know, we do need to have a pullback because we've been in this bull market forever. So I want to go back to this chart. We started this bull market in October, at the end of October. Can y'all see my screen?
Yeah.
Yes.
And we pushed straight up. We broke this high from July. I mean, we broke the highs from January. So we are due for a pullback. So if I throw the fib on this move, you know, I'm like, man, this thing really needs to pull all the way back to this July high. But even if it doesn't, and it just pulls back into this imbalance, I'm prepared to start looking for buys. Now, let's say it pulls back to this area and I take a buy. I have to make sure that if I take a buy here, I don't use a lot size so big that if it pulls back down here, that I get cooked out of my account. Y'all understand that?
Yes.
Hence the low leverage that we
And this is
want.
why you do what my brother was saying. You DCA, you spot trade here. You take the lowest lot size possible, probably, to account for maybe further possible drawdown. Right? Because when I buy here, it doesn't matter anywhere I buy on the way down, on this way down here is going to be a good position. Anywhere along this blue line, this pushing down is going to be a good buy in the next couple of months when price end up here. Anywhere all here would have been a good buy. The problem is we try to buy and we buy at the highest leverage possible. And then if the trade pushes down a little bit more, we get cooked out of our account. So instead of worrying about getting cooked out of our account, we want to buy this. If you're in an unleveraged or unregistered broker or whatever, unregulated broker, you probably want to use the minis, right? You want to start accumulating minis. Maybe you buy a little bit here. Maybe you buy a little bit here. Maybe you buy a little bit here. You know, eventually it turns around and it starts pushing up. And maybe you don't buy anymore until these positions come to positive. Then you start buying again. Whatever your strategy is, it's fine. But you have to be, okay with whatever your strategy is. Does that make sense?
It makes perfect sense.
Okay, so this is what I mean by DCAing and understanding, hey, when I buy, I'm buying with the understanding that in December, I'm still going to have these positions. I'm not stopping you from doing short-term trades. Maybe you're selling this at the same time. Maybe you're selling it short-term, but you're accumulating positions because you're accumulating these positions with the understanding that, hey, man, I'll be able to cash out in December or February of next year. Or, whenever the Fed starts saying that, hey, man, we got to start raising rates. Now you can start cashing out of your buys. But maybe prices at 49,000 by then, and you're 11,000 points up. And maybe you got 17 positions that you bought in at. And some of those positions are 0.01 and 0.02, but you've made 10,000 points on a 0.02. That's $20,000. Does that make sense?
Oh, it makes perfect sense. I literally used to trade this way. I was stacking my positions while I was in drawdown.
Well, I know, but you were doing that with a lot higher leverage.
Right. That's where I was messing up. But since then, it's not like that anymore.
So now that we're talking about that, do you know that in the United States you can't do that?
You can't stack positions in the US?
You can't. That's martingale. You can't do that.
Shut up.
Well, so listen, maybe you can, but you can't. Okay, here you can do that, but you have to get out of the first position you were in before you close. Like, let's say you wanted to take some profit later on. You would have to take profit on your first entry. First. Well, and your next entry after that, and your next entry after that, which is
you know why all that stuff is against the law though in the United States?
Because they're greedy and they want to control everything.
But I mean, yes, but the real no bullshit reason why they don't want you to be able to trade in the United States is because stop and think about the history of this country. This country was built off of slave labor. Okay. And this isn't going to turn into a racial kind of conversation, but if you go back to the equation of GDP, gross domestic product, it's population growth plus productivity growth plus debt growth. That equals GDP. So when the slaves was working for free, they didn't have to pay them. It was free labor. So you got all this productivity and a really high GDP. Then they came along, I don't know, in the 1800s or whenever it was, you know, and really it stretched into the 1900s, you know, and they abolished slavery. So now you don't have a free workforce anymore to blow that GDP up. Now you got to pay all these motherfuckers to go to work. So there has to be somebody to flip the burgers, to take out the trash, to do the menial task in this country. Okay. That's why we got the prison, the private prison system, but it didn't replace the productivity of slavery. So what they can't have is all the working class people getting on Zoom and learning how to trade and getting good at it and slapping on that motherfucking leverage and blowing the fuck up. Who's going to do the work if too many people are doing that? I mean, we already got y'all with your asses out on OnlyFans and whatever else online stuff that y'all are doing. So that's why all this shit is illegal in this country, because
it's a control thing.
Right. I mean, they have to have a workforce. So that's really the no bullshit reason why they can't have everybody knowing how to trade. That's why they don't teach in school. We was talking earlier about how come they don't teach the 12-year-olds this stuff. That's
so
why.
they can't in quotes have everybody trading, and then the people who escaped that box of prison and learned how to trade and became successful, now they just make it harder for them to take all of their earnings. That's all. That's the worst they can do to me, is make it hard for me to keep all of my earnings.
Yeah, well, yeah. I mean, if you think about it, it was a perfect way to handle it, because before all this internet shit, you couldn't get access to no unregulated broker in another part of the world, right?
Mm.
You couldn't. Nobody.
Way to look at it is too many of us don't tap into it, and it's not to make it racial, but the reverse is happening. So we are outsmarting them at their own game. That's a problem.
Well, I mean, I personally don't think it has anything to do with whether you're black or white. And the only reason I say that is because of this. Go back to GDP, the equation. Population growth plus productivity growth plus debt growth. So we don't have enough people in this fucking country, let alone races. They don't have enough people. If you don't have enough people, you don't have the productivity to pay down that growth, that debt that you keep borrowing. The debt is you borrowing from the future to pay for shit today. You know, them wars, we borrow from the future to pay for them wars today. You know, that pandemic, we borrowed from the future to give everybody steak and lobster during the pandemic, you know, today. You know, so there aren't enough workers, period, in this country, you know, which is why that debt ratio, that debt to GDP ratio is out of whack. So I personally don't think it necessarily has anything to do with race. I think it has to do, there isn't a workforce. There isn't enough of one right now. So I don't care if it is only 8% of us that learn how to trade. You're taking that many more people out of the workforce. And it's going to be more than 8% because you're going to have families and girlfriends and so on and so forth that you're going to potentially pull out of the workforce because you're making too much money. So you don't need your wife or your husband or your whoever to work. So that's my personal opinion about it versus the race thing. Of course, there are some people out there, I guess, that probably don't want to see, you know, black people or whoever do better. But from a pure, we gotta be productive as a country perspective, and I don't have enough people in the country to begin with. No, I don't want people learning how to trade, and I don't really want people online, you know, pulling their ass out on OnlyFans and whatever other kind of way they're making money. I don't want to see that because I need a workforce.
Well, they're creating one by banning abortions, but I digress.
Well, they have to if you think about it. I mean, how many kids, how many people are having kids? When you think about when we grew up, you got four kids in a family, pretty much. Now, I guarantee that number is way down. The families
That
are
open border, we can't miss out on that open border. That create a workforce.
Mhm. But
well, I mean, I
some
agree.
don't want them to come in. When hot sauce is $6 a bottle because nobody's picking these chili peppers, then everybody will open their eyes.
Well, people get brainwashed by what the politicians tell them, you know. I mean, the reason we've always historically allowed immigrants in here is because we needed the workforce. The reason these people all of a sudden don't want them in here, I think, is because inflation. You know, I mean, people have crabs in a barrel mentality. I mean, if I can't make it, I don't want this immigrant coming across getting shit for free. I'm going to work and I can't make it. So you get a politician in there, you know, like a Trump as an example, that demonizes, you know, immigrants, and there you go. You know, you don't want them in here. But the problem is you need them. You don't have a workforce. You native people here, people that were born here, you're not going to no field picking shit. You don't want to go to Walmart to stock the shelves. We as Americans only want to do certain kinds of work. But we don't want the immigrants here. It doesn't make any sense. Meanwhile, the GDP ratio's way out of whack. Who's doing the work? What's going to happen is these motherfuckers is under the cover of night creating AI robots to do the work. And the cost of that technology is going to get cheaper over time, and they're going to push your motherfucking asses out of jobs. And then you're going to be mad. You know, and I'm not saying you guys on the call, but, you know, you get the point. That's a bigger picture of what I think is going to happen. And it's going to be some Hunger Games shit. Corporation, Amazon, and whoever else, Tesla, you know, they're going to have all the money. They're going to be flying around on their spaceships. You know, Elon already trying to go to Mars and shit, flying around in their spaceships. You're going to be down here on Earth desolate, you know? No money. Begging to go pick the chili peppers and the oranges and shit, you know, but she didn't want to do it. You know? Nobody wanted to do the work. Begging for a stocking job at Walmart, you know? Robot gonna be in there doing it. Pay for the robot one time, shoot it software updates. He ain't taking sick days. He ain't got an attitude at the office with the boss. He ain't fighting with his coworkers. You know, he show up on fucking time, you know? All of that. So productivity gonna be back through the roof. You're just gonna have a robot slave force. You know, that's how it happens. Then you bring that GDP ratio back in balance. Country ain't in debt no more. Nobody's country will be in debt.
So you create this robot workforce, which I'm not 100% opposed to, but then everybody else just has to get in where they fit in because the robots took all the jobs we used to know how to do.
Yeah,
that's what I think. I mean, they'll probably give you a basic, like a basic welfare check. I don't know what they're gonna call it.
Yeah, $1,000 stipend.
Huh?
$1,000 stipend.
I don't know what it's be, but it ain't gonna be
universal basic income. That's what it's gonna be called.
Right. It'll probably cost something like that. A universal basic income.
The universal basic income.
Right. And whatever that number is, I'm sure it ain't gonna be a number that's high enough for you to be like chilling and taking trips and shit. You know, your ass is probably gonna be on the level of what a welfare check is today. You know, them niggas, those people that get them welfare checks, you know, that shit don't last all month. You know, they be like scraping. They be trying to stretch that shit out probably from about the middle of the month to the next time the check coming, you know, on the first or whenever it comes.
That's why you teach your kids to trade.
Well, it is why, but I'm just saying, I'm just saying, this is the future that I see. I ain't saying it's gonna be here tomorrow. I mean, I don't know that a timeline that it's going to be here, but it's probably going to get here sooner than people think, because that's what all this crypto shit is. You know, it's tech and it's moving fast. You know, I got a crib in Vegas, and I was down on the strip and I saw a self-driving car down there. You know, how long before damn near all the cars are self-driving? The tech is already here. I've seen it. So what does that mean for Uber drivers, Lyft drivers, cats that drive trucks, 18-wheelers, you know? What does that mean potentially for pilots? So, you know, that's where it starts. I mean, I read an article, I don't know, a year and a half or so ago that said that Amazon had AIs or robots in their warehouses doing whatever people used to do because they couldn't hire enough people. People didn't want to do the work. So
do you know them warehouse rules? Bro,
I know the
warehouse. Yeah, how packages you gotta box and all that stuff. They're kind of strict, well, I understand.
Yeah, I don't know the time hacks, but that robot is going to meet it.
Oh,
you know, where the person get tired and be like, bullshit.
That's why I laughed when you said the robot show up on time. The robot don't ever leave.
But you're right.
The robot is locked up in the cage when the program's designed and run, it turn on and run.
Yep. Mm-hmm. So, I mean,
they find a way. Once they find a way to charge all that stuff, it's game over there.
Yeah.
To keep like the robots is good. But I was watching an article about those automated trucks, tractor trailers and stuff. Right now, the technology is not good enough for them to have where they could, you know, charge all those charging stations. But once that power grid gets right, oh, that's game over.
Yeah, it is. You're right. You're right. You are 100% correct. Now, I don't know what that timeline looks like, but I imagine it ain't 10 years or 15 years down the road. I mean, I hope it is, but I don't think it is. Because the tech is moving fast. That's why them tech charts, Tesla, Bitcoin, Nvidia, that's why them charts look like that. They're vertical. Tesla's not, but you know, Nvidia and a lot of them crypto charts are. I believe as soon as these interest rates come down and these folks don't feel like they have to pay $1 million for a car, Tesla's chart will probably follow. That's my guess.
Apple will too. Whenever
right. All the tech.
Whenever China print the money from that historic economy breakdown with Evergrande, the real estate bowl, Apple. Look.
Right. So this stuff right here, this kind of conversation is why I think it's important to understand the fundamentals. You know, the technical shit is important too, but if you know this stuff about the real world, the fundamental side, then when you hear stuff like we're not raising rates anymore, and then you hear down the line we're lowering rates, and then you see a news story like I did this week that they bailed out a bank in New York City, that means print money. I know what's going on in China with Evergrande, that means print money. I know there's 2 wars going on, you know, that means print money. It's steady to lowering rates, combine that with printing money, the markets are going to go up. And the ones that outperform is the tech. And that's crypto, and that's them 7 companies or whatever, Apple, Facebook, you know, Nvidia's in there now, but there's like 7 companies that drag the rest of the market along. I read somewhere that the markets go up, but the reason they go up is because of like those 6 or 7 tech companies. The rest of the companies are either down or kind of sideways. And I have a theory on why that is. It's because those other companies, their livelihoods, their business model is tied to interest rates, because most of them have to borrow money to expand. And interest rates are high now. So for the last, I don't know, 2 years or whatever it's been, they've contracted, meaning their stock prices have gone down, or at best they've gone sideways because money's not cheap. When they lower the rates, money gets cheap and they will do better. But those tech companies, they got so much equity, they're not beholden to no interest rate. So their shit rises regardless. Think about it.
Anybody got any questions?
I don't got no questions, but I got a comment. These past 2 days have been tremendously, they not overwhelming. I'm just like, my mind is so full of information, and I've had a few aha moments. So I'm appreciative, Todd. I'm appreciative.
You're welcome. I mean, that's the purpose of the group, guys. It is fun to come hang out and crack jokes, but in the future, I envision a community of people who have a general understanding of the market, and we can all eat based on the understanding. Sean is strong in crypto. It'll probably always be strong in crypto. It'll probably be a few other people that gravitate towards crypto. It'll be some of us who are stronger in indices. So when somebody is saying, hey, man, we need to look at this trade, we need to take this trade, it'll take 5 minutes to look at the chart and kind of understand, this is a good opportunity, or I'll pass on that opportunity. Here lately, there have been several times, and I get it, we all don't trade longer range charts, but we can use these longer range charts to take advantage of future, to put us in a good position for the future, right? Like Bitcoin, and I thought Bitcoin would push further down, but it didn't. Sean and now Kenya have both told me I caused them not to buy in when they would have bought in. But oil, I'm sure they made up for it by buying oil, and we just got into these JPYs selling, same sort of thing. These are longer range trades that will build our financial base, right? You can grow your account 5, 10, 15K in these moves. Then you can just move on to the next move. And the objective is, as these cycles progress, and move on to the next cycle, we can take a nest egg of money from one cycle to the next. And eventually we will all be millionaires, maybe tens of millions. All we're doing is picking up our bag and moving it to the next investment for the next cycle.
Hey, real quick before y'all go, hey, do pull up a QQQ or maybe NASDAQ, do a NASDAQ to BTC chart, and you can leave it on the monthly time frame.
What do you mean NASDAQ to BTC?
Well, the same way you do like USD JPY, do NASDAQ Bitcoin.
Okay.
Put that.
I don't think. Do you know
try QQQ BTC. Try NAS BTC. It may not work, but just try it.
Well, just do it now, BTC.
Well, you didn't have BTC. Okay, well, we can't pull it up, and we can't pull it up.
Well, you can pull them up side by side, though.
Well, I want to pull them up as a pair, because what you're going to see is the NASDAQ is down.
But have you ever pulled it up as a pair?
Well, I saw it on some clip I was watching. I've never personally done it.
Yeah.
And I don't know if they must not have been using TradingView as the platform. I don't know the platform that they pulled it up on. But what it basically showed was the NASDAQ was down something like 99% to Bitcoin over the course of the last, I don't know, 10, 12 years, something like that. So a while ago, you made a reference to me liking crypto or preferring crypto over all this other stuff. And that's why, crypto is the fastest horse in the race. The other stuff, the only thing that remotely compares to it is those 6 or 7 tech companies in the NASDAQ. Everything else is, in my opinion, pure shit, and I wish we could find that chart, but I don't think it's going to be on here.
I agree that crypto is the fastest horse. But there's an incredible amount of value that you get from trading Forex. For instance, when we're dollar cost averaging into market cycles, we want to do it at a lower leverage. So you're not going to make the amount of money that you can make trading on the shorter time frames. When I say shorter time frames, even the monthly chart, if you have $100,000 to throw at it and you 10x during a cycle, you make $1 million. I mean, that's easily doable in crypto, but most people aren't going to come in here with $1 million, and they're going to have to trade up their small capital into sizable capital. And you can do that when you understand how to trade. So, I think the important thing that I wanted to kind of press out today was the financial cycle is indeed cyclical. It's going to go around. You're going to see the same things happen over and over. Interest rates are going to increase. Interest rates are going to go down. When they increase, when interest rates go up, you're going to see the indices fall. When interest rates decrease, you're going to see the indices go up. These are basic fundamental things that we can look for. When interest rates go higher, the dollar is going to go higher. When interest rates fall, the dollar is going to get lower. It's going to get weaker. If we all understand this basic thing, then we should all understand where we want to look for the most profitable trades. And that's kind of where I wanted to take the meeting today. I know we kind of got off on tangents, which is okay if people are learning. But we just have to remember, that if you don't understand something that somebody is saying, stop the group and be like, hey man, I don't understand. Like, can you explain it in a different manner, or can you explain it further? Anybody have any questions? There's a lot of trade setups this week, a lot of them, and that's not coincidence, because we just closed a 2-month candle. That's why you have all these setups. The market is moving, off of these 2-month candles. Next month we'll close the quarter, so we have to look at the monthly. We have to look at the 3-month, the quarterly candles, because that's also going to be a huge driver. Anybody have any questions? Everybody know what trades they're trading? All righty, good folks. Appreciate y'all's time.
Thanks, Todd. Thanks, Sean. Thanks, everybody.
Okay, iPad. I'm glad to see you, iPad.
Nice to
tell
see you.
hubby I said, what's up?
He was on here.
Hey, I'm sure he was quiet. Yeah, I said, what's up?
Man, appreciate
What's
that.
going on, man?
How you doing, Todd?
All right. All right, everybody take care. We'll get back together either during the week or next Saturday.
JPY. Thank you, Todd. Them JPY.
Yeah, JPY, baby.
See you on Tuesday, Todd.
Okay. Tuesday.
Y'all enjoy the rest of the week.
All right, have a good one, everyone.